Hey, Bulls and Bears, it is Tuesday, December 14th, 2021. Thank you so much for being here. We have a lot of economic financial news to catch up on. And yes, we're back with another dose of economic reality. But first, just a 30-second snippet to describe where we're at right now in this monetary structure, in this economy. Well, things are headed in the exact direction that we had anticipated now for a couple years. Continuous rising prices, never ending liquidity into the financial system to allow people to continue to borrow money, to continue to buy these products and goods and services that are going nowhere but higher and higher and higher. So, of course, you're going to see, as prices rise, of course, you're going to see higher debt levels. It's pretty simple. Higher prices need more debt to keep rising. Once the money spigot gets shut off, or once something disrupts the lending system, for example, higher interest rates, then it's game over. So will the Fed raise rates? Will they shoot a hole in the bubble that they created? Well, there's some warnings out there. Some people, some institutions are giving warnings. Now, I've said here that I think it's very unlikely for the Fed to do that because there's so many people watching the Fed now. 20, 30 years ago, not so much. The internet wasn't very popular back in the 80s. Hardly anyone had computers back then. A few people did. But starting in the mid 90s, especially early 2000s, people started putting more information on the internet about the banking system, the monetary structure, how the dollar is created out of thin air in infinite amounts. And people now are becoming more aware. It's still a small percentage of the population, but because of even the small group of people that know how this works, I still think the Fed is not going to be doing the rate hikes that they're warning about or they have been discussing. All right, we are in the middle of, maybe at the top of, or close to the top of the biggest financial bubble, the biggest economic bubble that we have ever seen. Many economists are calling this the everything bubble because everything is propped up. Prices are distorted no matter where you look. Recent article, the Fed poses bigger risk to stocks than the variant, Morgan Stanley says. So isn't it interesting that the Fed is the biggest risk to stocks when the Fed is the reason why stocks are so high to begin with? And down here it says Fed may accelerate tapering timeline to combat raising inflation. The question is, how high will inflation get before the Fed actually does any sort of real tapering? All right. Also, Morgan Stanley, somebody from Morgan Stanley by the name of Skelly still sees deep drop coming in stocks because why? Because of the potential for tapering and the Fed pulling back on some of their market support. So if anyone ever doubted that this especially the stock market, but this whole economy was propped up by the Fed, well, here's your proof, and here's what's coming out of the mouths of the bankers out of Morgan Stanley. All right, the Fed pulling back, tapering is going to cause a stock market correction, a drop in stock prices. All right, so what good is the stock market? And yes, I know people make money in it. I saw my 401k go up, which is kind of nice. But when prices are rising twice as fast as the markets are going up, does it really make you a winner in the end, or does it put you further behind the eight ball? All right, but what good is a stock market where it requires never-ending support by the money machine to continue to rise? So forget about company profits and innovation and companies reinvesting profits so they can grow. It's all about easy money, low interest rates. How much can companies borrow? How much companies can buy back their own stock? That way the insiders can go ahead and sell at elevated prices, rinse and repeat. Zombie companies not making enough profits to even maintain the debt levels that they're under. It's pretty amazing when you think about it, but we're going to see what happens at the Fed meeting. And it's actually going to be tomorrow, December 15th, when we'll have a rate decision. And no, I don't think they're going to raise rates because there's too many people with their eyes on the Fed right now. All right, let's switch gears a little bit here And let's talk about the cost of living, rising prices. US wholesale prices shoot up again and show inflation still getting worse. Just as we predicted, again, there's nothing being done to reverse this situation. And people started calling us doom and gloom a couple years ago. I said things were going to continue to get worse. And we've been proven right time and time again. And all the people that said we were just doom and gloom, not so many of them are saying that anymore. There's still a few people down there saying that. But as we are continuing to show what's happening and how we've predicted this for several years now, I think a few people anyways are starting to wake up. And more from this article right here. Wholesale prices rose rapidly in November and signal that U.S. inflation is likely to remain high well into 2022. And yes, unless something or someone pulls the plug on the money printer, we will continue to see rising prices. It's not just the money printer. We also have a lot of other forces in play here with the health crisis, overregulating the farms, and burdening the people that actually produce, the people that actually do the work. While we have the fat cats, the bankers that sit up in their offices and really control the economy. And this just came out here recently. Take a look at this chart. This is the producer price index. Now, the consumer price index on the inverse looks at prices from a consumer standpoint, someone that's going out shopping, swiping their credit card. But this is the producer. These are the manufacturers. These are more raw materials and the cost of production, the cost of getting the product created and out to the public. And look at this chart here. This goes back 10 years. And look to the far right here. This is a pretty scary looking chart. And I don't see any sign of really slowing down or taking a pause or even going sideways. Looks like pretty much a vertical, straight up situation. So ask yourself, is this just going to reverse one day out of the blue, or are things going to continue to get worse? Yes, we have the situation with all the ports that are backed up, all the cargo ships offshore, and that's a big part of it. But the big picture is there's not a lot of manufacturing jobs coming back. Very few, in fact, are coming back here to the US. And in fact, companies are being motivated more to outsource jobs and offshore jobs even more now because of the rising prices. There's a bigger demand now for companies to pay higher wages. So what will they do? Remain in the US and go ahead and pay higher wages to keep up with this rising inflation? Or will they just ship jobs overseas where labor is cheaper to some other country that has lower cost of living where they can pay lower wages? Well, I think you know the answer. This headline comes out of the Hill. Bank of America chief says consumers are spending at a faster rate than he's ever seen. All right, again, no surprise. People are spending money now like never before. And a lot of it is people are buying now, just like that warning that we saw out of some people that suffered through hyperinflation. They said, spend your paycheck as soon as you get it, because next month or next week, whenever your next check comes out, everything's going to be more expensive. So we're beginning to see what we've witnessed in other countries here happen here in the United States. And when the dollar goes, look out below, because it's still the world reserve currency. About 60% of all trade globally is conducted in US dollars. What else did we predict here? Well, we predicted that crime was going to continue to rise as poverty rises, as society continues to become more desperate and more in despair and more buried under debt. You're going to see more desperation. NBC news crew robbed at gunpoint. I've seen several news articles like this just over the past few months, where even news crews are not safe now to go out and get footage because of the rising prices. We see the smash and grabs. We see all the cities with their the rates of homicide, etc., at all-time high levels. We've talked about that here several times. And guess what? Things are looking like they're going to continue headed in the same direction. So continue to prepare, people. Like I always say, stay safe, stay well, keep stacking. Take care of yourself, be aware of your surroundings, and come back here for more news and updates. Thanks everybody for watching. Peace.